You can't go anywhere. You can't even watch mainstream media now without them saying, hey, we're in a bubble and this bubble's going to pop and this is going to end badly. I'm going to take the other side of that argument, and I'm going to kind of go through my thesis about why I don't really think we're in a bubble. And I'm going to do that now. And this is always fun to talk about. At the end of the day, you go to StatsEdgeTrading.com, you look at the swing trading or day trading or investing or all three, because you get them all for one price, and we just trade our systems. If I can kind of tell that maybe something is going to occur in the future in the markets, maybe I can, sidestep some of these drawdowns or something like that. So that's why I'm always looking out there. Now, when most people look at a bubble, I think they just look at this and they say, wow, the Qs is up so huge, is up from its lows like 60%. This is absolutely amazing and therefore has to be a bubble. If stocks are going up, somehow it has to be a bubble. The problem with this, the way I look at it, is that you're focused on a wrong side of the market. You're focused on a number of stocks. If we look at what makes up the Q, it's just a handful of stocks. You're talking your Mag 7, your FANG, whatever we're calling it these days. But what is the average stock doing? What are most stocks doing? And are most stocks in a bubble? Or is this just one sector and one idea, and maybe this is getting a little bit too ahead of itself, and it will be okay if AI cools off and then other sectors kind of pick up the pace from that? So how do we know what the average stock is doing? Well, if you take a look at the SPY, it's going to look mostly like the Qs. And that's because it's what's called cap weighted, which essentially just means the larger the company, the more of an impact it has on the S&P 500. And the S&P 500 is your 500 biggest names. If you look at Apple, Microsoft, Nvidia, Amazon, these names, that's going to be like 20, 30, maybe 40% of the S&P 500. But if we go to the RSP is the same 500 names that are in the S&P 500. However, they are just equally weighted. So, the 500th company has as much impact of this index as Nvidia does, the largest company in the world. And you can see this hasn't really gone anywhere today. Right? We're up like 5% year to date. And this is that November high. And we're just right back there now. So if this is a bubble, and if markets or stocks are incredibly overvalued kind of on aggregate, why isn't this chart ripping? Most of the time in bubbles, you have massive participation across all stocks, and everything's getting overbought and all assets are getting inflated, and the average large cap stock is just kind of chopping around. If we look at MDY, this is your mid caps. So this is MDY is between, I think, $2 and $10 billion. So it's this middle range of companies. You probably wouldn't recognize a lot of these companies. You would probably recognize mostly everything in the S&P 500. These companies you probably wouldn't recognize, but they're not little rinky-dink companies. There's only 400 of them here. Well, you can see, yes, we're up from the lows that we had, but we still haven't even broken this high. And on the year, we can take a look here. And year to date, we're up 3%. So up 3% in your average middle of the road company. And then we can take a look at IWM. And IWM is barely made a new all-time high, but it's still within the same price it was 4 years ago. And if we take a look at this, year to date, up 10%, which, keeping in mind that these are more volatile instruments because these are your small cap names. These are companies around $2 billion or under, and there's 2,000 of them. This is more volatile. So it should be up more than the overall market. So this being the case, this is kind of making me think, are we actually in a bubble? If we look at XLF, we look at financials. Well, financials don't look like they're in a bubble. They're right where they were here in February. They're right where they were in November. If we look at healthcare, this doesn't really look like it's in a bubble. It's well below its August high. It's well below its February high. And it's still below that kind of last year's high as well. So that doesn't look like it's in a bubble. So neither healthcare nor financials. And then we look at technology, and this is what people are looking at and saying, okay, well, technology is ripping, therefore we're in a bubble. It's important to go back and take a look. And I think a lot of people, I don't like the connotation, of a bubble. I think that's one of my biggest problems, because the connotation of a bubble is that there's a moment in which the bubble pops, and that means everything falls apart. But if we go back and let's take a look at the QQQ, and we'll go back on the QQQ, and we'll go to a monthly chart. Let's go all the way back to the dot-com bubble. And it looks like this thing just kind of one day fell apart. You got to remember, it's a monthly chart. So it took years and years and years to get to this price. So of course you had lots of opportunity to get stopped out of any positions that you had. It was only a problem for people who just decide, I'm going to hold come hell or high water, regardless of what price is telling me to do, which if you're watching this channel and even you don't want to trade with StatsEdge, which gives you systems with stop losses and all of that, I doubt there's many people on this channel who just say, I'm going to just hold this thing as it just completely falls kind of 80% down. And again, you had lots of time. It didn't move up here for about a year. So from 2000 to 2001, we didn't have much of movement at all. And during this time, if you take a look at, say, the S&P 500, I don't know if it goes, yeah, it does go back that far. Way less of a pullback. You're talking like a 50% pullback, which again would be unfortunate, but we were down 30% in COVID. I think we were down another 25, 30% in after COVID, or 25, 30% in 2022. These type of markets happen just more frequently. So because it was a tech only bubble, and when tech exploded, it didn't really affect regional banks. It didn't affect banking systems. It didn't affect the general economy as much. All right, a 50% pullback is still a large pullback, but they didn't kind of end the world when the tech bubble burst. And I'm kind of seeing, again, a lot of the same echoes here where, yes, if we go to the QQQ, we're up a lot, right? Technology is up a lot, but then you take a look at financials, which are important. You take a look at XRT, which is retail. That really hasn't moved. So your retail companies aren't really moving. Your financial companies aren't really moving. Your healthcare companies aren't really moving. So if there is a bubble, it seems to be really kind of isolated right now. So that might actually be one of these scenarios where if AI starts to kind of sell off, which is not what we saw when we were looking at things like Amazon earnings and all of that, doesn't look like it's over by a long shot just yet. But if it does end up being over, then it's one of those where I don't think we're going to get a huge spillover to everything else in the world, because we're just not seeing this over exuberance across all of the markets. We're seeing it really, really isolated. And this is also why a lot of people are like, I don't understand why my portfolio isn't up as much as it is. Well, it's because if you were in the S&P 500, then yes, you got these S&P 500 returns. But if you kind of have an average stock out there, it hasn't really done much this year. So don't be too hard on yourself in that respect. So again, just what I sometimes feel like I just have to turn on the camera and be the calm voice in the room on the way down, on the way up, all of the time. And I just look at this and I say, yes, some of these stocks are just ripping all the time. And yes, that might continue for God knows how long. I certainly don't. It, could just be going and going, going forever. And I'm not certainly going to be one to ever call a top on any of these things. But I just take a look around at the average stock and I say, we still have a lot to go. If people want to start maybe selling some of these AI names, but say they take that profit and they go through to have, instead of taking that profit and just going to cash or going to bonds, if they start cycling that down to other cap stocks and to other areas of the market or other areas of the world, the economy, we could still have a long time to go in other stocks, even if we are kind of done with AI moving higher. That's my rant for this week. I appreciate you guys for tuning in. And until I talk to you next week, get away from the screens.